Companies across the globe are required to report not only on their financial performance, but also on the environmental and social impact their activities generate. This necessitates good governance, and so companies must also report on how their governance is executed. Reports must portray how these issues and the management thereof link to the other. This is so-called integrated reporting, and globally this is governed by the International Integrated Reporting Framework released in December 2013. Now, previously, companies only had King 3 to rely on as a guide on how to report this way. Auditing firm Nkonki have been studying reports and rewarding companies for their efforts for 5 years now. To find out more about the awards this year, we cross to the JSE. Gunther has with him Nkonki's lead partner for integrated reporting, Thuto Masasa. Gunther.
Thank you, Natasha. Thuto, welcome to the show.
Thank you, Gunther.
Let's start off with the obvious question. Why is Nkonki doing this?
Well, I mean, as Nkonki, we pride ourselves in being in the lead and actually encouraging the lead. And I just want to give you maybe a little bit of background. This year, if you look at the Global Competitiveness Report, actually South Africa does rank right up high in terms of reporting. So if South Africa ranks up high in terms of reporting, we want to make sure that we keep encouraging that good reporting coming out of South Africa.
Good reporting. What is good reporting?
Well, good reporting is transparent reporting, and I guess, well, in the context of integrated reporting itself, it now comes with that futuristic view for the purposes of sustainability of companies.
The criteria that you use, can you explain those to us, please? Okay,
in terms of the criteria that's been used this year, we literally looked at the integrated reporting international integrated reporting framework, which was released in December 2013. And basically within the framework itself, we looked at the three buckets, looking at the fundamental concepts which are underpinned by the value creation and the 6 capitals that the framework talks about, the content elements, which is about 8 of them, and we also looked at the guiding principles in terms of what basically the companies should embrace in doing their reporting.
Okay, so now we've got the top 100. What distinguishes number 1 from number 100?
Right. Obviously, number 1 would be much more alliance to the International Integrated Reporting Framework itself.
Yeah, which is a guideline.
Which is a guideline. Yeah. And basically using that guideline to tell their story very well that is understandable to any other stakeholder out there. And I'm talking about a wide range of stakeholders, from your capital markets to maybe an employee inside, and all the way even to a governmental level where we see maybe an impact if there is from a legislation perspective.
You mentioned value creation as one of the elements. What do you look for there in particular? What are they supposed to show?
Well, value creation is really the sustainability factor that I talked about. So as a jockey of a company or a CEO of a company, you should be in a position to talk to these stakeholders and tell them basically how you are going to keep this company in business for the next 20 years and how you're going to be competitive and you're going to bring value back to them. And I said, again, it does cover quite a wide range of stakeholders. So a capital investor would want to know exactly how you're going to bring back returns to them, whilst an employee wants to affirm that they will still be employed in 20 years' time. Yes. So that value that we're talking about is really the value that the company will bring for these various stakeholders, and also the sustainability in the future of that. Yeah.
You probably, qualitative analysis. I'm concerned about companies that say one thing but maybe don't do it. Do you look at that?
Well, the framework does encourage completeness and reliability of information as a guiding principles when you prepare reports. And the one thing that I must make clear in terms of our awards, we don't go into companies themselves. We look at reports as publicly available. Yes. So it goes within the assumption that whatever information that you're preparing, if you are using the framework, it does basically give you a guidance to say, make sure that the information that you are communicating is complete and reliable, either be it positive or negative information. Yes.
Lastly, number 1, what was the one thing that really stood out there?
The things that stood out, I would then maybe just pick on the actual, say, where the companies did well, the strategic focus of the companies that came out strongly, and they scored very high in terms of the average score itself.
Do you think that has something to do with the current economic times to give the reader a sense of ease? You say, look, guys, we got this in hand.
And perhaps it does, because, I mean, we had a roundtable a couple of days ago with investors and analysts, and what the analysts are saying, what they really do want out of companies and, say, the jockeys of those companies is the trust factor. So yes, that strategic focus, I guess, it does bring an element of trust, of knowing where then the strategic focus of a company is and where it will be in 2 to 3 years' time.
Okay, thank you very much for your time. Unfortunately, it's over.
Thanks.
Here we go, Thuto Masasa from Nkonki. Time now to go back to studio.
Thanks very much. Well, more from Gunther coming up in your news at 1.